All right, so we got the Figma IPO, and to say it was a successful one is probably an understatement. Figma set an IPO price of $33 per share. They issued 12.5 million shares in the IPO, secured 1.22 billion in additional capital from that offering. But now here's where the drama kicks in, right? When the shares began trading on the open market, the first trade occurred at $85, right? So IPO price at 33. First trade in the public markets hit 85, meaning the true market price was obviously a lot higher than the IPO was priced at $33 per share. And as I record this, let me just check this live in real time for you. Figma's share price is sitting at $90. It did run up as high as, I think, about $122 in a day or two post IPO. Now, if you've seen any commentary on the Figma IPO over the last couple of days, you'll see the statement that Figma left money on the table. And the idea behind this is that if you price the IPO at, say, $90, which is what it's trading at today, instead of 33, they could have raised almost an additional $3 billion in capital for the business without any additional dilution. Now, based on the early trading post-IPO, maybe that's a fair assessment, but that would have been an extremely aggressive price for the IPO. That would have given the company a market cap of about $37 billion, or about 37 times ARR. Yes, right, in the days post-IPO, it ran up to about 65 times Q1 ARR. But the most richly traded kind of public SaaS companies that we track at the moment are Palantir, Cloudflare, and CrowdStrike, right? And if we have a look at their ARR multiples, right, we can see CrowdStrike trades at about 25 times Q1 ARR, Cloudflare's at about 36, Palantir's obviously an outlier here, north of 100. But for Figma to be priced at 65, right out of the gate, that would have been extremely aggressive. If we think back to episode 22, where we did this pre-IPO deep dive on Figma, we looked at what we thought were kind of the most appropriate comps for Figma heading into this, right? And the companies that we came up with were kind of fast-growing companies at around $1 billion in ARR. And that gave us companies like Monday, Confluent, Rubrik, and GitLab, right? Now, Rubrik, interesting, I think, is probably the best comp here, right? Rubrik now is growing faster than Figma, so they generated 54% ARR growth, but they're only generating 17 times ARR multiple. And the reason for that is they're still running big operating losses and negative free cash flow, right? The advantage that Figma has is that they have positive operating margins and high rates of free cash flow, right? A company that looks more similar to them from an operating margin standpoint is Monday. Monday's not growing as fast. They're only growing at 30%, and they get a 14 times ARR multiple.